Welcome to another episode. My name's Jose Najarro, and today we're going to take a look at Google's Q4 earnings. So let's get started. Google just reported earnings today, February 3rd, 2020, after hours, and the stock is down close to 5%, sitting at about $1,400. This is ticker GOOGL, Class A stocks. So let's take a look at what happened and what's going on with Google. If you guys have been watching my videos, you can see today I am not home. I don't have my green screen with me. I'm out of work. I'm out for travel. So excuse me not having my green screen. But I did bring the essentials, the camera and the microphone and my headphones to be able to provide information for you guys. The grind does not stop. So I hope you guys enjoyed the video. One more thing before you guys continue, make sure to hit that subscribe button. I am producing a lot of content right now and I hope you guys are enjoying it. So let me know what you guys think and let's get on with this episode. So how this episode is going to go, first we're going to take a look at some news article on what Alphabet Google had to report, and then we're going to take a look at the spreadsheet and the all the information they gave to us during their earnings. And we'll take a look at that. And I highlighted all the key points that I enjoy and what I didn't enjoy about this earnings. So first, let's start off to see how Google Alphabet ended up doing with earnings per share and revenue. Q4 GAAP earnings per share were $15.35, and it beat by $2.81. Revenue was $46.08 billion, which is up about 17.3% year to year, but it misses by $790 million. A lot of people are saying that the main reason we have this 5% drop is because of this miss of revenue. It did miss, but at $790 million compared to the $46 billion of revenue, I wouldn't think causes about a 5% drop on the stock. So if that's the reason, I do believe there is some overreaction, but maybe we have some more information continuing on. So here in Seeking Alpha, one thing I'd like to take a look at is their forward estimations on EPS and their forward PE ratio. The company right now for 2020 is expected to make somewhere between $54.26 on earnings per share, which gives this company about a 25 PE ratio. With the current price, let's actually take a look at what the actual value would be. Right now sitting at about $1,400 divided by the 54.26. It's about 25.8 PE ratio, which I think for a tech company, this is not bad. It's becoming the normal. If we take a look at Microsoft, I think Microsoft had similar PE ratios. I do believe a forward PE ratio of 25 are what most big companies are at right now. And to me, that kind of doesn't. To me, it's not that expensive. It's not the cheapest, right? You would want cheaper forward PE ratio, but a 25 is not that bad. To open up a small position in. Okay, so here we are in the results for the fourth quarter of Google, as well as the full fiscal year of 2019. This company says that their investment in deep computer science, artificial intelligence, ambient computing, cloud computing provide a strong base for continued growth and new opportunities across Google, right? I know Alphabet is the company's name. I just enjoy saying Google better. So from here on, I'm probably just going to say Google instead. But yeah, we can see this company is definitely increasing their investments in all those items, right? And I think that is a very important thing for them to do because that's where it does seem that the market is going. Artificial intelligence and cloud computing are my favorite out of these. YouTube is already a $15 billion in annual ad revenues. I'm actually one of those $15 billion. I'm a dollar in those $15 billion, but that's pretty impressive. And cloud is now a $10 billion revenue run rate for the year. With revenue, they provide about $162 billion of revenue this year, which is up about 18% year to year. But I think they might have been overestimating that $162 billion. Let's take a quick look here. Total revenues was $161.8 billion we have here. And what was expected for this company? Let's just take a look at Seeking Alpha. Seeking Alpha gives us expectations. So Seeking Alpha said Google was expected to make somewhere. So these are just analyst estimates, and this is the average. And I definitely like looking at Seeking Alpha for these because these are analysts that do this for a living. So these revenue estimates are usually pretty close, and that's why I especially like looking at them for forward PE ratios and forward revenue estimates. So Seeking Alpha estimated 161.92 billion. This company made 161.857. So it wasn't that far off. So I can't see that being the main reason this company dropped about 4%, 5% over the after hours. But one thing is sure that all these companies were beating with revenue, with record revenue, right? So it does definitely, I guess investors were expecting a little bit too much, and that's what happens when you expect a little bit too much. But still, right, we see revenue of up 18% year over year, and we're still seeing these big companies continue to grow at a double digits. Normally back then, big companies, you wouldn't see growing double digits year over year. But right, these companies are keeping up. I'm talking about Microsoft, Facebook, and all these other big companies that I did earlier this last week. All these companies are up big to double digits, and that's something you don't see, but it tells you how these companies are here for the market, and they're continuing to invest in the market and in the proper markets, and that's why they are seeing these growth continuing. This is the first time Google is also disclosing their revenue more diverse. Like now they're including search, YouTube ads, and cloud. Back then they used to give all this revenue under one portion, but now they divide it, and I think actually that's a pretty good thing because now they're more transparent to their investors of where the money is coming from, and I agree with that concept. So the first one we're gonna take a look at is Google Search. Google Search, we see this growth. Last year was 23 for quarter four. So right now we're gonna take a look at quarter four. Last year for quarter four, this company's Google Search and other ads made up about 23.3 billion. Now they're making 27.2 billion. So we see an increase in there. YouTube ads back then, last quarter of 2018, was 3.6 billion. Now it's 4.7 billion. So more people are spending more money on ads. Google advertisement as well. Google advertisement 2018 quarter four was 32.5 billion. This year was almost 38 billion. So we're seeing huge growth in all of these ads, which show the power of Google right now. We're seeing all these big companies coming in, putting YouTube ads, and they're still also doing Google advertisements. Google Cloud last quarter of 2018 was 1.7 billion. Now it's 2.6 billion. So a huge increase, almost over 50% increase there. Google Other, which is YouTube non-advertisement revenues, are included in Google Others, and this is back then was 4.7 same time last year, and right now it's sitting at 5.2. So we see a healthy growth in all of Google's revenue. Then they have Other Bets. Other Bets, if you guys don't know, I'll probably do a better video on Other Bets later on, but Other Bets are all these smaller companies that Google has. Google has so many small companies, but at the end of the day, they're super small compared to the total size of Google, and that's why they have them as Other Bets. I'll definitely want to do another video on their Other Bets so you guys can see the giant amount of companies this company has. So total revenue, a quarter of four of 2019 ended at $46.075 billion compared to 39.275 same time last year. So we see that healthy growth, and that's pretty impressive. So now here we're going to take a look. They ended up seeing how Google ads, YouTube ads, and all these other types of revenues have been going on throughout the year. And we can see Google Search since 2017 grew in 2018, and it continues to grow in 2019 by heavy digits, right? 69 billion in 2017 to 85 billion in 2018 to 98 billion in 2019. YouTube ads in 2017 were 8.1 billion. Consider that to the 11 billion in 2018, and now the 15 billion in 2019. Almost 100, almost. There was probably, it's like about an 80% growth from now compared to 2017. And you can see this is definitely pretty strong. Google advertisement, right? Google advertisement in 2017 was 95 billion. In 2018 was 116. And now in 2019 is 134. So we can see this heavy growth. Google Cloud, which I think is the most impressive. Google Cloud in 2017 was 4 billion. In 2018 was 5.8 billion, and there was a huge growth right now in 2019 with 8.9 billion, up about $3 billion. Again, another high, that's probably a high 50% growth there. So we can see Google revenues. These are strong double digits. In 2017, total revenue was 110 billion. Last year was 136 billion, and this year was 160 billion. So yeah, actually total revenue, yeah, about that. I messed up by about $1 billion in each, but yeah, that you can see the heavy growth in this company. So here, percentage-wise, revenues, when we're taking a look at quarter four of 2018 to quarter four of 2017, there was a 22% growth in revenue. Again, that double digits. Now, when we care to quarter four of 2019, compared to quarter four of 2018, there was still a double-digit 17% growth. If we're taking a year-to-year basis, 2018 full year of 2018 compared to a full year of 2017, you see a 23% growth. And 2019 compared to 2018, you see that 18% growth. So you're seeing this company making still increasing by double digits, even though it does seem to be trending down, right? In earlier in 2018 compared to 2017, it was in the 20%, while now is in the heavy teens for 2019. But still, double digits, I mean, I think are really amazing things to see. Next, let's take a look at operating margins. Operating margins are pretty flat. They were 21% for quarter four of 2018, 20% quarter four of 2019, 20% for the total year of 2018, and 21% for the total year of 2019. So we can see those are pretty flat level wise. The most important thing here is diluted earnings per share. This company in 2018 made $12.77, where in 2019 it made $15.35. For the full year of 2018, this company made $43.70, and for 2019 it made $49.16. So this company is making a lot of money, earnings per share, and that is pretty insane. Next, I just wanted to talk about their number of employees. Since the end of 2018, this company grew about 20,000 employees. That's actually pretty impressive, the amount of employees they have added to their services. It was 98,700 at the end of last year, and right now it's sitting at almost 119 employees. So that's pretty impressive to see that growth, and we're actually most likely going to see that in the income statement. We're going to see where those employees are going to or charging to. All right, so the first thing we're actually going to take a look at is the balance sheet, and this is my favorite statement to take a look at. I feel like here you can definitely see how the company is doing. The first thing is that cash and cash equivalents. This company last year ended at $16.7 billion of cash and cash equivalents. This year is up to 18.5. So this company has more cash. Next, we're going to take about marketable securities, and marketable securities are usually short-term investments, but they obviously have a higher interest rates and make more money. So you usually see companies putting it in marketable securities. And last year, this company had $92.4 billion. This year is up to $101 billion of marketable securities. So we see an increase in cash and cash equivalents, and we see an increase in marketable securities. So total cash and cash equivalents and marketable securities for this company grew about $10 billion compared to the same time last year, and that's actually pretty impressive. Accounts receivable this quarter is sitting at about $25 billion compared to the same time last year, sitting at $20.8 billion. But this usually this increase, right, it just depends on when the customer is paying them. Seeing a fluctuation here, to me, it's definitely never a scary thing. Seeing an increase, it just means this company has a lot more payments due to them. But like I said, this is the amount of revenue increase you would expect this to happen. Total current assets grew about $17 billion. Right now it's sitting at $152 billion compared to $135 billion same time last year. And the biggest change was right in that total cash and cash equivalents grew about $10 billion. And we saw about $5 billion in account receivables. Everything else went up a little bit here and there. Income taxes and receivables were actually about 2 billion higher. So that's the other 2 billion that we saw increase in there. Again, nothing here is really crazy. The only thing I really like about there is we do have more cash and more marketable securities, which are our current assets. Next, we're going to take a look at total assets. Total assets have increased by about about 40 billion. And we saw about 20 of that 40 billion comes from total current assets. The other 20 billion come from these two things, operating lease assets. And this last year, they did not have to report it. It's just a new rule that came out. So that's why back then we have a zero, where now we're sitting at 10.9 billion. So obviously we're going to see that huge increase in total assets. And the other is property and equipment. We see this company has about 20,000 more employees. So obviously they either bought a new company or they bought a new facility and have new employees running it. So that's why we see an increase in property and equipment. So again, nothing that big in total asset increase. Just again, the total current assets with that cash and cash equivalents. Next, let's take a look at this company's liabilities. Let's take a look at total current liabilities first. Total current liabilities have increased by about $10 billion. And the biggest change in there are just accrued compensation and benefits and accrued expenses and other current liabilities. So here, this company, again, with more employees coming, it just depends when that payment has to go to the employees. So we see that compensation and benefits, any bonuses that this company needs to pay off, has increased by about 2 billion compared to the same time last year. And we have about a 7 billion increase in accrued expenses and other current liabilities. Again, with the amount of revenue this company has increased, seeing these jump that much, and by the amount of employees this company has grown, these numbers don't scream any red flags to me, and to me they seem acceptable increase according to how this company is growing, both in revenue wise and in employee wise. Next, we're going to take a look at long-term debt. This company currently has $4.5 billion of long-term debt, where same time last year was $4 billion. So this company increased its long-term debt by 500 million. But one thing that it confuses me, right? Sometimes I wonder why these companies take off these long-term debts, right? When this company right now is sitting at about $18.5 billion of cash and cash equivalents, why did it not take out that money from there? But right now we're in the era where rates are pretty cheap, so it's okay to take a long-term loan right now, and just hold on to that cash for any emergencies that might happen. And to me, again, that's the only reason I would see a company take a long-term debt instead of using this cash, is because the rates are right now pretty low. So it makes more sense for them to do that and have that cash and cash equivalents on hold for now. At the end of the day, total liabilities grew about 20 billion. But here we have that same thing where operating lease, again, last year that was not reported, so we have a zero here. And this year we have about 10 billion. So out of that 20 billion increase, 10 billion came from that new liability that they have to report. And the other 10 came from total current liabilities, which we saw grew about $10 billion. Again, none of these, we saw increase in total assets, we saw increase in total liabilities. Most of the increase in total liabilities were from a liability that did not have to be reported last year. So it makes a big difference in percentage increase there. And then the total current liabilities, to me, they do not give me any red flags, because the amount of revenue growth and the amount of employee growth this company has had this quarter that compared to the same time last year, again, those do not worry me. Next, we're going to take a look at this company's income statement. Another statement I enjoyed looking at. Here we already talked about their revenues, so nothing there that we really want to see. What I really want to see is where this company is using their expenses. This company this quarter compared to the same time last quarter used about $5 billion more in expenses compared to quarter 4 of 2018. And for the full year, it used about $20 billion more on cost and expense. And we can see the biggest changes here were in the quarter of where we saw a $5 billion increase. $1 billion came from research and development. And these big companies, right, for them to stay up to date, they have to make sure this company is doing plenty of research and development to make sure their technology is up to date. and they increased about 500 million on sales and marketing. So this company is definitely making increasing their sales team, which I think are good news. We also see strong growth in both research and development and sales marketing during the full year. We see 21 billion last year in research and development to 26 billion dollars this year. That's pretty impressive. This company spends more money in research and development than many big companies have a market cap of. And that, to me, again, it shows me how devoted this company is to making sure they are up to date. And Google is actually looking pretty strong in my mind. Obviously, we do see a big change in cost of revenues, but when revenue has jumped by about 18%, you obviously expect more revenue costs more money. So you definitely see the cost of revenue up. So next, the final thing I want to take a look at is number of shares this company has. And they have been buying back a nice amount of shares. Same time last year, this company had about 700.9 million shares. And right now it has 695.2 million shares. So it is buying back a numerous amount of shares per quarter. And it's still intense. We're going to see in the cash flow that this company is buying back shares. Next, we're going to take a look at the company's cash flow. The only one I care about here is the net cash provided by operating activities. And this is the cash flow that comes from its everyday use. This company this quarter ended with 14.4 billion of positive cash flow from operations, where same time last year was 13 billion. So we see an increase of about 1.5 billion in cash flow. Again, really good numbers. And for the year, we see that similar growth. Last year, for full 2018, this company had about 48 billion dollars in positive cash flow from operations, and this year has 54.5 billion. So we see again healthy increase. And next, we're just going to take a look at repurchase capital. This year, this company, just this quarter alone, this company bought $6 billion worth of shares, where same time last year was 2.6 billion. So just this quarter, where this company has actually been pretty high, this company continues to buy its shares. For the full year of 2019, this company bought $18 billion worth of share, where same time last year bought $9 billion worth of shares. So that's everything I have on Google. Let's do a quick recap. First, we see Google beat earnings per share, but missed on revenue. We saw that revenue miss was not by a lot. It was about by $0.02 billion or $0.2 billion. So again, if the main reason for this drop was that, then this company, I believe that would be an overreaction in my opinion. But again, I guess investors were just buying this stock today. I mean, today, before after hours happened, this company was up 3%, right? So this company was, I guess the investors were expecting a huge too much from this company. But now the company is down about 4 to 5%. This company's forward PE ratio is close to 25.8 at current prices, which is not that expensive in my mind. I definitely think I can find a better investment, so I don't think I might open up a position yet, but if I was to open a position, I think it would be a small position. This company has a very strong balance sheet. We saw the balance sheet is amazing. It has plenty of cash and cash equivalents to pay off its long-term debt and to pay which is almost nothing. We also saw that this company's total liabilities are pretty diverse, right? It's nothing too heavy that this company can't handle. We saw that double-digit year-to-year growth from this year and last year, and that again, that is definitely pretty impressive to see big companies like this to have that kind of growth. We saw research and development on this company. This company is focusing very much on its research and development. We see that growth on expense there. What else do we see? This company is buying back its shares at some crazy levels, right? It bought about $19 billion worth of shares this year alone, almost over 100% increase compared to the same time last year. So this company is buying back its shares. And what else did we see? There were a lot of other things, so let me know what you guys thought about this. Let me know what you guys think of Google. Google definitely is a strong company, and I don't see it going anywhere anytime soon. So take care, guys. Have a good night, and let me know. And don't forget to subscribe.